That's right, folks. American Express has just hit another revenue milestone. 10 quarters in a row, they've smashed their own records. This is unprecedented growth in the company's history. And guess what? Since I last talked about this stock, it's up almost 40%. That's a 40% gain in just 8 months. Join me on my quest to beating the market the third consecutive year by subscribing to my YouTube channel for more stock analysis and content like this. But what's fueling this incredible success? Is it sustainable? Let's dive deeper into their Q3 2024 earnings and find out. First, let's break down their revenue streams. We'll see how each segment is performing and analyze whether this growth is sustainable. First up, let's talk Build Business. Now, this represents the total spending on American Express cards. Think of it as a measure of how much people are using their AMEX cards. And as you can see, it's up 6% year over year. That's solid growth, especially considering the economic uncertainty we've seen lately. But here's the interesting part. This growth is driven by a few key factors. First off, we've got the continued strength of the U.S. consumer. Millennials and Gen Z are spending more than ever on their AMEX cards, driving a significant portion of this growth. These younger generations are a key part of AMEX's future, and their spending habits are a positive sign for the company. Now, let's not forget about businesses. American Express has a strong presence in the commercial sector, and their Build business here is steadily climbing upwards. It's up by 1% year over year. This may seem modest compared to the consumer segment, but remember, businesses are usually more cautious with their spending, especially during uncertain times. So, this consistent growth is a good sign that American Express is meeting the needs of its business clients. Now, let's go global. American Express isn't just a U.S. powerhouse. Their international business is booming. Look at this growth, 13% year over year. That's a major contributor to their overall success. They're expanding aggressively in key markets like the UK, Japan, and Australia, offering a range of products tailored to local needs. For example, in the UK, they have a strong partnership with British Airways, offering premium travel rewards to their cardholders. In Japan, they've partnered with Delta Airlines and are focused on building their presence in the travel and entertainment sector. And in Australia, they're focused on small and mid-sized businesses, offering a range of cards and services to help them grow. As AMEX expands its global reach and attracts new customers worldwide, this segment is becoming a key driver of their growth story. Now, let's talk about a major growth engine for American Express, net card fees. This is the revenue they generate from those fancy premium cards with all the perks. Think of it as the membership model in action. And guess what? This segment is on fire, up by 18% year over year. That's some serious growth, driven by a surge in demand for AMEX's premium offerings. AMEX is attracting new customers like never before. They've pulled in a record 3.3 million new cardholders this quarter. That's a massive influx of new members eager to experience the benefits of the AMEX brand. But it's not just about new faces. AMEX is also keeping their loyal members happy. Their high retention rates mean that people are sticking around and enjoying those premium perks. This combination of attracting new cardholders and keeping existing ones satisfied is a recipe for success in the premium card business. Now, let's dive into the numbers that really excite the financial geeks. Net interest income. This is where we see the impact of AMEX's lending strategy. Basically, it's the profit they make from lending money to their cardholders. And as you can see, it's up by a solid 17% year over year. That's a sign that their lending approach is generating strong returns. But here's the real test. Are they making profitable loans? Let's check out their net interest yield. This tells us how much profit they're generating on each dollar of those loans. And guess what? It's holding steady at a healthy 12%. That's a sign of disciplined lending practices and a focus on quality over quantity. And it's not just about the yield. American Express is also keeping a close eye on credit risk. Their 30-plus days past due rate is a key indicator of how well those loans are performing. And as you can see, it's holding steady at 1.4%. This means that only 1.4% of their loans are overdue by at least 30 days. That's a pretty low rate, indicating that the majority of their borrowers are paying on time. Now let's talk about the dreaded write-offs. This is when AMEX has to give up on a loan because they don't expect to get their money back. Their net write-off rate is a key indicator of their overall credit risk. And as you can see, it's at 1.9%. This means that 1.9% of their loans are written off as losses. That's also a pretty low rate. And it's a sign that they're not just chasing high yields, but also managing risk effectively. Okay, so we've seen the impressive numbers, but now let's talk valuation. How do we connect these strong results to the actual worth of American Express? We need to look at the key inputs that drive a company's value, things like revenue growth, profit margins, and market share. These are the building blocks of a solid valuation story. And guess what? American Express's story aligns perfectly with these factors. Their revenue growth is strong, with 10 consecutive quarters of record revenue. Their profit margins are healthy, exceeding 20% in the last 12 months. And they're holding their own in a competitive market with a 13% share of global network volumes. That's a powerful combination. And guess what? American Express's story aligns perfectly with these factors. Their revenue growth is strong, their profit margins are healthy, and they're holding their own in a competitive market. That's a powerful combination. AXP's forward PE ratio of 18.59 is slightly higher than the industry average of 15.94. This suggests that investors are willing to pay a premium for AXP's future earnings growth potential. Based on the PE ratio and other multiples, AXP appears to be fairly valued, possibly slightly undervalued. However, AXP's strong growth prospects, financial health, and competitive position could justify a higher valuation. Okay, so AMEX is looking pretty good so far, but let's not get ahead of ourselves. There are always challenges and risks to consider. First up, the big one, macroeconomic factors. Can AMEX weather a potential downturn? Well, their credit metrics are solid, with low delinquency and write-off rates. That's a good sign. But as you can see, their downside scenario projections show that things could get tougher if the economy takes a hit. Specifically, they're forecasting a potential rise in the U.S. unemployment rate, which could impact consumer spending and their ability to repay their loans. On top of that, they're projecting a potential slowdown in U.S. GDP growth, which could further dampen consumer and business spending. Now let's talk competition. Who are AXP's biggest threats? Well, the usual suspects, Visa, MasterCard, and the rising fintech players. But as you can see, AMEX still holds a decent chunk of the market, especially in the U.S. consumer and commercial segments. That gives them some breathing room. The network volumes chart gives us a good overview of where AMEX stands compared to its rivals. These numbers represent the total spending processed on AMEX's network, including both their own cards and those issued by their partners. As you can see, AMEX holds a respectable 13% share of the global market. That's a decent chunk, but it also shows that they're up against some giants. They can't afford to get complacent. The competition is fierce, and AMEX needs to keep innovating and offering attractive products and services to stay ahead of the game. This chart shows that their growth is outpacing some of their rivals, particularly in the international market. That's a positive sign, but they need to maintain this momentum to remain competitive. That's a key challenge for their future growth. Now let's get into the nitty-gritty of earnings per share, or EPS. This is a key metric for investors as it shows how much profit the company is making for each share of stock. But here's the thing. There are two types of EPS, GAAP and non-GAAP. GAAP EPS follows strict accounting rules and includes all revenues and expenses, even those from one-time events. Non-GAAP EPS, on the other hand, allows companies to exclude certain items to show their core operating performance. In AXP's case, they're excluding the gain from the Excertify sale in their non-GAAP EPS, as it's a one-time event. This gives us a more accurate picture of their ongoing profitability. And here's why it matters. Transparency builds trust. By clearly explaining these adjustments, AXP is showing investors that they're not trying to hide anything. That's a sign of a company that's committed to honest and transparent reporting. So what's AXP's outlook for the rest of 2024? Well, they're expecting continued growth, but at a slightly slower pace. They're projecting revenue growth of around 9% for the full year. That's still solid, but it's a bit lower than their previous guidance of 9 to 11%. This slowdown is likely due to a few factors, including the potential macroeconomic headwinds we discussed earlier. But here's the good news. They've actually raised their EPS guidance to $13.75 to $14.05, up from $13.30 to $13.80 previously. This suggests that they're confident in their ability to maintain profitability even if revenue growth slows down a bit. So overall, the outlook for AXP is still positive, but it's important to keep an eye on those potential challenges. So there you have it, a deep dive into American Express's Q3 2024 earnings. Here's what we've learned. They're on a roll with 10 quarters of record revenue. This growth is driven by strong consumer spending, especially among millennials and Gen Z, a booming premium card business, and smart lending practices. They're also expanding globally with impressive growth in their international segment. However, they face some challenges, including potential macroeconomic headwinds and a fierce competitive landscape. But overall, AXP is in a solid position with strong fundamentals and a clear vision for the future. What do you think about AXP's performance? Are you bullish or bearish on their future? Let me know in the comments below. And don't forget to like, subscribe, and share this video with your fellow investors. Thanks for watching.